This week in economics on the 5th of December 2015. On some outlets you'll get this on the 6th of December, but nonetheless it will be current. Last week was a very turbulent week in terms of the markets across the globe, and we'll start out in China with the PMI, and then we'll look at some of the factors in the U.S. and we'll put all this evidence together. We'll go to the Bureau of Economic Research for the let's see a second here. This would be the International Trade in Goods and Services of July 2015. It was released on the 3rd, but we'll first get to the China PMI. This is numbers, man. I'm here, and as the U.S. goes into a protracted holiday weekend that is called a Labor Day, will labor on. Nonetheless, the Caden, I think I'm pronouncing that name correctly, Chinese General Manufacturing PMI. Operating conditions deteriorate at faster rate since 2012 is the headline here. The summary is Chinese manufacturers saw the quickest deterioration in operating conditions for over 6 years in August, according to the latest business survey data. A total of new orders and new export business both declined at sharper rates than in July, contributed to the most marked contraction of output since November of 2011. Lower production requirements prompted companies to reduce their purchasing activity at the fastest rate since March of 2009. And while weak client demand led to the first rise in the stock of finished goods in 6 months, meanwhile soft demand conditions contributed to market falls in both input costs and output charges in August. The key points here is the output contrasted a quickest rate in 45 months. Purchasing activity declined at the sharpest rate since 2009. And the comments here from Dr. He Fan, the chief economist at Maxim Global Insight. The final China PMI for August continues to retreat, with sub-indicators signaling continued weak demand in the market for goods and factors of production. Recent volatility in the global financial markets could weigh down the real economy, and a persistent outlook may become self-fulfilling. Macroeconomic regulations and controls must continue, and fresh reform measures must be introduced. Fine-tuning should go hand in hand with speedier implementation of structural reforms in order to release the full potential. This is incidentally put out by the market people. We use their PMIs here, and it's a leading media group is that they are utilizing here on the PMI. I was just looking at the actual PMI numbers here, and there's a composite index of 5 individual index with the following: new orders at 0.3, output at 0.25, employment at 0.2, supplies delivery time at 0.15, stock of purchase items at minus 0.1, with delivery time index inverted so that it moves there. And let me just make sure here, all of these are minus here. The diffusion indexes have properties of leading indicators, are summary measures showing a prevailing direction of change. An index above 50 and overall decrease below is 50 is a decrease in here. And let me just make sure that we have all the numbers here. Sometimes things don't set out as they should. The PMI is at about, it is below 50. It is about 48, I think, just looking at the graph here. Yeah, about 48. I'm not sure why it is up as it is. So let me just go to one of a factor here with this is a general manufacturing PMI, and let's do the general service PMI. This is for China. And again, this PMI data, which covers both manufacturing services, points to renewal fall in overall business activity in August. And they divided it up. The Chinese Composite Index posting below the neutral 50 value at 48.8, okay, down from 52.2 in July. Though only modestly, it's the fastest contraction of output seen since September of 2000. Since December, of 2009. And you just get a little background here. The renewal decline in overall output was largely driven by faster contraction of manufacturing production in August. Moreover, the latest fall in manufacturing output was the quickest in 45 months. And the Chinese general service business activity, this is some Chinan here, posted at 51.5 in August, down from 53.8 in July, signaling the slowest increase in activity in the current 13 months sequel of expansion. Total new order growth at the service sector companies also weak in August. The latest increase in new business, the slowest seen in just over a year, according to anecdotal information. Relatively subdued market conditions have dampened client demand in the latest survey period. Meanwhile, new orders contracted at Chinese manufacturing companies in August, with a rate of reduction quickening to a 17-month low. Consequently, total new business at the company's level fell for the first time since April of 2014. Soft activity and new order growth led to slower increase in service sector employment in August. Moreover, the latest expansion in service provider staff numbers was the weakest seen in the current 2-year sequel of job creation, and fractional job shedding persisted at manufacturing companies with a pace reduction quickening slightly since July. Service sector companies registered the lowest backlog of work for 7 consecutive months. The same rate of depletion was modest overall, according to panelists. Weak growth in new orders. Unfinished business outstanding workload, meanwhile, rose at manufacturing companies, though the rate of accumulation remains marginal overall. The level of work in hand, not yet completed at the composite level, fell for the 5th straight month. Cost trends continue to differ between manufacturing service providers. In August, service sector business reported a further modest rise in input prices, while good producers signal a market reduction in their input costs. Moreover, sharp declines in manufacturer cost burdens led to input prices at the composite level to fall for the 20 consecutive months at a modest rate. And the average price by service companies increased modestly for the 2nd consecutive month in August. In contrast, factory gate charges set by manufacturing companies declined at the sharpest rate since January. This is again from Dr. He Fang. He's chief economist at the Calcium Insight Group. The headline Calcium Insight Group service PMI remains above the 50 mark. That separates growth from contraction in August, but the increase in activity was smaller than in July, driven in part by a softer expansion in financial service sector, caused to some extent by stock market fluctuations. The Cassian Chinese Composite PMI fell below 50 for the first time since April of 2014, indicating the expansion of service activity was not strong enough to offset the contraction in manufacturing in face of continual pressure on growth. Macroeconomic stability policy must continue, and this is basically the same thing, so we won't go over it. Let's move to the U.S. So we kind of get a little picture of this. Let's see if we have. I don't think we have any PMIs here. Market issued a lot of PMIs on the 2nd here. Let's look quickly at the Eurozone PMI. We looked at China, but look at the Eurozone, then we'll go to a little different type of index here. I'll just summarize this. I won't go into everything. This is the data was collected the 12th through 21st of August. Eurozone manufacturing PMI at 52.3 in August. The flash at 52.4, and the July flash was at 52.4. Output growth accelerated in Germany, Spain, France, and Greece continued there. And let me just give you the ones here. In the Netherlands, it was at a 5-month low at 53.9. This is the manufacturing PMIs. In Italy at 53.8, a 4-month low there. In Ireland, 53.6, an 18-month low. And the Germany flash was at 53.2. That's a 16-month low. In Spain, the 53.2 was a 10-month low. And in Austria, 50.5, a 3-month low. And in France, a 4-month low of 40.3, the flash at 40.6. And in Greece at 39.1, a 2-month high. So Greece is pulling out a bit there. The August data signals a further expansion of Eurozone manufacturing sectors and continual growth in Germany, Italy, Spain, the Netherlands, Austria, and Ireland, offsetting ongoing contractions in France and Greece. At 52.3 in August, the final seasonal adjusted Eurozone manufacturing PMI was only a shade below its early estimate, and the July final at 52. Eurozone manufacturers reported solid expansion of production and new business, with rates of increase improving to the quickest since May of 2014 and April 2014 respectively. Demand improved in both domestic and export markets, as highlighted by solid increases in export business support for job creation as companies raise employment at the quickest pace in 4 years. Backlog of work rose for the 4th month running into a greatest extent since April. National survey data signals that only one nation, Germany, saw improved rates of expansion for both production and new orders. This was underpins by the fastest expansion of new export business in 1.5 years and steepest job creation since January of 2012. Output growth also improved in Spain despite slower increases in both new orders and new export business. Italy, the Netherlands, Austria, Ireland all registered higher levels of production and new orders, although the rate of expansion was slower across the board. Employment rose in Italy, Spain, Netherlands, and Ireland, but fell slightly in Austria. The weakest performer remains, of course, Greece. Greece manufacturing continues to report steep reductions in output, new orders, new export business, and employment, but rates of contraction all slowed sharply. France reported accelerated falls in output and new order employment. The average output price at Eurozone manufacturers rose slightly for the 4th time in the past 5 months. In August, selling prices increased in Germany, Italy,